Hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, available to you there. It's under the channel L.A. Little. So taking a look at these markets, today we had an up day, and actually it was an all-around day, both down and up. Big ranges one more time, ended up almost 1% higher, more than 1% higher in some cases. You had sell-offs in gold, in bonds, although the bonds recovered mostly, most of what they had sold down. Big rally in oil again. That was after about a 7% spike on Friday. So in roughly 2 days now, 12% move in the oil market. Bonds, the dollar sold off a little bit. So around the market itself, commodities pretty much hit other than oil. Markets get a nice rally. Looking at the indexes themselves, we had another rock and roll day. Let me grab the indexes here. And if you look at it, it was almost an engulfing candle. The top bottom of this range today was at 1981 roughly to 2021, so another 40-point range. These have becoming normal everyday occurrences anymore. And as we were talking about on the weekly show and also talking about last week, this volatility is probably not going to go away until we break this range, and then you're going to get an expansion of that volatility before any kind of a slowdown, shall we say, in terms of volatility. So if I'm looking at the range, really the majority of the range is here in this area. Then you've kind of got the top and bottom of it. But this is the range. I mean, this is what they're fighting about. And every time they get down towards the low of that range, they're buying it. Today, volume was light. You got down there, right? Not enough volume to kick it out yet. Bang, programs come in, they hold it. And as we get to the end of the day, they rally it. And that end of the day rally, you can see it on an intraday chart. So if I pull over, let's pull over like a chart of the SPX, and if we look at this, I've got it on 1 minute, so let's put it on like 10 minutes so we can see it. So you get a big sell-off to start the morning, spike up, back down, and when this came back down and tested into this bar and held, right, and then it held here and started up, once it got over here, it was short covering right into the close. And so you got basically a 10-point spurt in the last 25 minutes or so off that last break. So a quarter of the range was off the last break basically, and spiked it into the end of the day. This volatility, you can go back any of these days and look at it, take them a day at a time, and you can see the kind of breaks, right? You get a break here, and what do? They test one time, push it lower. If you just crawl back farther intraday, it's the same thing here, where you get over this area, right, and then you just seesaw all the way up. It's been that way over and over and over. It continues to be that way. Question is what does it do next? This test came on lighter volume. That suggests to me that this is going to try to push it higher again. Now, the one bar, if you remember, we've been watching this bar as well, that December 18th bar, which was the post-Fed Day bar back in December. What are we doing? We're right back up there testing it again. If you can push enough, then you can try to go up here and test the top again. But, this thing is building for a larger move one way or the other, and it's building in a larger way. And before you know it, we're going to get one or the other. So you've got swing points here, swing points there. And if we go another week without breaking this, this is also going to end up being, this bar here is going to end up being a weekly swing point high too. And so what does that say? That says that you've got swing point highs on multiple time frames up here and swing point lows on multiple time frames down here. And that says that this range becomes even more important when you think about the whole range, right? In that when that one breaks, it's going to move, right? Because I can guarantee you that you're going to find stops up here and stops down here if that setup ends up happening. You already have them down here. If this ends up being a swing point high here on the weekly, you can guarantee there's going to be even more stops up there. They're gonna just buy it like crazy if it starts to break higher. So big range, still trying to decide. The pressure still looks to be to the downside, but you know, folks, when you can't break it down, what are they going to do? They're going to flip it around. They're going to try to take it right back the other way, and I suspect that's what we're about to see. Let's, from the index view, let's look at a couple of the other indexes, and then let's move to the sectors, because the sectors were suggesting they were going to try to break down this week. And here's the same volume lighter. Let me see what the Russell looks like. Volume also lighter on the Russell. So in all three cases, it looks the same. Let's go over to the sectors. Because in the sectors, it's not as cut and dry. The IBB still hanging at the top, still struggling. The ITB, a little reversal today, not much volume. Transports had big volume today as they pushed into the lows. So transports test the lows, volume expands, and that suggests that they're going to try to go after them again. Now the transports, to me, that's not the major sector out there, but it's an important sector. It's important with Dow theorists for sure. Here's the SOX. Now the SOX, less volume than yesterday. It's really not an extended move, so it's an over-under. It tested that low, held it. It's going to come back. It's going to try to come back up and do a retest regen. And so we're going to see in all these cases now, or in a lot of these cases, we're going to see retest regens, which are going to give us clues very soon probably as to what's going to happen on the way back up. If we keep going down the list here, XLB, now these and the energy got a decent little spike up. This was up, what, about 1%. Really still a mess of a chart, not that much there. The energy, though, got a nice bounce today. Energy looks to me like going to get up to this next level finally. So, and a lot of times I talk about having patience. The big breakdown here on the energy and where it took out a bunch of lows and really got this thing started was back on, what is it, about the 20th, I think it was, 18th, 20th. Excuse me, 28th of November. So the 28th of November, we just closed out February. So that's all of December, closed out April, closed out January. So that's all of December, all of January, building a base. And that base building has taken place just like you would want if you're a trader. You get a swing point low, volume is on that swing point low is this high. Then you come off with a nice spurt up here with heavier volume, which I guarantee you is short covering, right? Goes up, comes back down, and what does it do? Comes all the way back down, test that low. And it does it on lighter volume. Leads back up, comes back down, test again. Now, even lighter volume on the test. This was not the best, but a hammer reversal. Now you test back into the hammer, can't give it up, right? And then, of course, if we go over to oil itself does its thing. That reverses. This one's going to try to press higher finally and come back up and try to test these swing point highs. So the test now is going to be back up into that area on the push back up. And the resistance, as we see here, really runs from there, and I suspect this will try to get into it tomorrow up to here. So that's going to be the push up, and that push up is going to give us a decent clue as to how much this is going to rally and if it's going to try to make it all the way back up into this gap area. These have been compressed. It's 2 months now. They've been compressed a long time, and they can get a decent rally. You know, the earnings are out this week. Part of the move was certainly oil itself, but part of it is earnings in that, you know, they're not, well, they are horrible, but they'd already marked them down so much they don't look as bad anymore. And so we'll see if they can spike up there and get back up. I do not expect these things to just, you know, if you bring over the weekly, they're not going back up to these levels anytime soon. They're going to still wallow around down here. You can see it's coming in this big bar now on a weekly. That low 77.51, price right now 77.86, so it's barely into the bar. I suspect it to get up here. You know, the swing point to test on this, there's two of them. There's this one which has the lower high, and that's the one I'd be looking at first, and then of course this one. So, you know, to get back up to, you know, these price points, and those price points on a weekly are 84, and over here it's about 85, 86, so about 86. That takes us, 84 takes us back to the gap. I would expect if you can get back to the gap area, you're doing really good. So that's kind of the target there. Kind of got sidetracked, but I thought it was worth talking about. Let's go to the next one, XLF. Now XLF had a nice reversal today. Now this one tested the lows, swing point low, broke it, had less volume, flips around today and swings back up the other way. It's going to try to do a full retest now, immediate, off this prior swing point low. If it can get over it, it kind of changes the picture near term and says, okay, this one's not going down any further. So if you remember, you know, the break here, the push back up to this price point was testing that retest regen here. It regenerated lower, broke the low. When it did, that says, okay, this should go down. It doesn't. Flips around, it's going to test again. Now, if it fails here and heads back down, even more evidence this thing's going to deteriorate. If it doesn't, then it's a sideways trend on this time frame. So, you know, all of these charts, the sectors are the ones to watch. The sectors are the ones that are going to give the clues near term as to what's really happening in these markets. So continuing on here, let's look at the XLI, and I'm walking through each of these to see what they're doing. So this tested lower, had pretty good volume. This one's going to test lower again. Doesn't have to do it tomorrow, but it left volume down there. XLK, and these traded heavy again today and had volume. Now this is a really one to watch because, you know, the technology, if you look at the sectors, financials, which we just looked at, technology is another one, healthcare, and the industrials. Financials doing a retest regen bearish, and they're doing it immediately. That could change the trend to a sideways on the short-term time frame. XLI left volume at the lows. It's probably going to go back and test them again on the dailies. XLK leaves volume at the lows, testing all these swing point lows. Going to try to do it again, you know, in the coming days. And so in other words, it's trying to break these out here and move lower. So far it hasn't succeeded. You know, and if you're old school, not neo, and you're just looking at these things, you know, what do you have? You have a higher high here, finally a low, a lower high, higher low, a lower high, lower low, a lower high, and I believe that's a lower high, another lower low, right? That's, you know, if I'm doing the trend stuff like that, that's kind of trending down. Until that breaks, it's an issue. And then when you're pushing the lows with volume, that's an issue in my books from the neoclassical perspective, because that says, hey, you know, you're slowly eating up whatever support's down there. XLP, let's see what this one looks like. also push lower with volume. These are getting interesting from the perspective, in my opinion, from the perspective of maybe they're not as safe as people think. And what I mean by that is like some of these consumer staples, maybe those dividends or maybe those buybacks that are happening in those big companies aren't as safe as we think. And that's leading to deterioration in this so-called safety sector. Utilities, and that one's going to test again lower, left volume again. Utilities did the same thing. So that's about 5 of them now we've looked at. Even though none of the indexes showed it, we're seeing it on the sectors. Same thing here, healthcare. Presses lower, presses with volume. This also is going to try to come back. XLY. And when I say come back, doesn't have to do it tomorrow, but when you leave that kind of spike down there, more than likely you're going to try to come back and test it. Here's an example on the other case, right? When I talk about coming back. You know, here's a nice spike up, big volume on this high, and what does it do? It tests the next 2-3 days, and then can't do it, breaks down. Well, this just pushed volume like crazy to the downside. More than likely, it's going to flip around here before long, if not tomorrow, and start testing again and see if it can break it. Volume has a tendency to get tested, you know, when it spikes at, you know, at price points that are critical. This one's not quite to the lows like we just saw in the XLK, for example, but it's pressing lower, and it's pressing lower with volume. Okay, so sector-wise, looks to me like this market's certainly not out of the woods from a bullish perspective. If I go over to the OX markets, there we actually had, as we talked about on the oil market, you know, we had a nice bounce in oil that helped the energy sector. That put some gusto into the stocks as well. This one's coming up to test the swing point high. 1745, I think it got over it. 1862 was the close. 1861. So it got over it by a penny. One shiny penny. If you get another day follow through here, then you can come test this low, and I suspect that would be the end of it. But that does look like a potential. I don't know if it's going to get any higher though. It's going to be tough to get over this price point. It's compressed like crazy though, so you know you can get that kind of a 25%. That's a 25% move. That's kind of crazy, but that's what that move is. And it probably will do it in 2 or 3. Well, it's already got 2 days up 10. It'll probably do it in 3 or 4 days if it's going to do it. It'll probably just shoot right up there if it's going to, and just squeeze everybody back the other way. So all nice big move on it, but let's go look at the other things that are more important from the perspective that we've been watching lately. One of those is the dollar. Dollar testing lower, doesn't have volume. Dollar's still going to hang. Dollar's just hanging up here at the highs probably. Bonds, we saw a little bit of selling, and I wonder if we got a good quote here, because that doesn't seem to jive with what I just saw. Let me pull up another chart and see what it is on that one. And this one looks more accurate. Looks like we didn't get a final quote on this thing. So here was the bonds down a little bit today. Pushed a lot of volume, but down. So it looks to me like bonds are just going to hang now. Elsewhere, oh, gold and silver. I saw gold tried to push higher and then gave it up, and silver doing the same thing, so nothing really special there. Let me look at copper right quick. Hanging at the lows. Oh, commodities still look beat up. If I look at the DVA, the grains just continue to get sold. And if I look at the continuous commodities of everything, it's very small bounce here off the wall. Overseas, mostly still hanging at the highs, no difference there. What's going to drive this market, if anything? It's going to be central banks. It's going to be central banks. It's not going to be, you know, earnings. It's not going to be economics. We keep seeing economics come out weaker. China PMI negative on Saturday. We saw decreases in our PMI today. We're not seeing economic numbers that are going to change this market, make it go up. What's going to change it is the Fed is the ECB, is central bankers. And if you realize, last week we had the Fed, and they really didn't do anything. But this week you have the Fed again, just in a different way. And how's that? Well, they're going to go hit the speaker circuit starting tomorrow. Bullied, and you just go down the list. It looks like there's 1, 2, 3, 4, 5 of them. These last two are giving speeches on policy. Rosengren is in, I think, Germany. Let's see where he's at. He's in Frankfurt, yeah, and he's talking about QE and what we learned from it, whatever the heck that is. And Lockert's going to do a monetary policy and economic outlook. So those are going to be kind of the, ones that really address economics and maybe give us a sense of what's happening. But what typically happens is that after the Fed has its meeting, and especially when there's no follow-up press conference by Yellen, these speakers go out on the circuit and start jabbering about what's going on. If they start throwing bones out there saying, hey, rate's probably not going to rise, blah, 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 then we can see some big spikes up. Or if they don't seem to suggest that, you can get some big spikes down. So the fact that this is the way we communicate anymore, you have to be aware that these guys are all coming out there and going to be talking. And you should note their times. I think Bullied, for example, has a conference after, or discussion, panel discussion. So usually they'll take questions and answer Q&A, and that's where things get told. So mark those on your list if you're day trading for sure, and be aware that that could be more fuel to the fire to the upside or the downside, depending on what the heck these guys say. That's it for tonight. What do I think is going to happen? It looks like you're going to get another day of, you might not get as much volatility tomorrow, but it does look to me like the indexes want to try to push a little bit higher. So I'd be surprised if we don't see that. The thing that could throw a wrench into all of this is Europe. And what I'm talking about there is if I'll just pull up, grab this, because Greece has been shaking things up. Part of the rally today was off of Greece basically saying, okay, maybe we have something we're going to do less than default. These guys are hanging at the highs. So there's two things that can happen when you make these kinds of runs. I mean, you make a 6% run and now you hang. Okay, in a stock, that's kind of a bullish flag in the old classical TA stuff, which usually says it's going to break to the upside, right? And so people buy that and they wait and they want to, catch the move to the upside. But this is a whole index, and it makes it a little bit harder for it to make that kind of run after a 7% move, right? So, when I look at something like that, it's not as if the probabilities are higher that this thing's going to break back down. But you got a swing point high that you broke and you didn't test. That suggests that on this next move, actually I should take that back because it actually did test on this index on the very next bar. But you got this big move up. I wouldn't be surprised to see some sort of feedback in, right? And a lot of our movement is based on what's happening in Europe. And that's more so even now than before because it's QE over there. And so Germany pushing up, stretching. I'll be curious to see if these markets flip over, and not flip over in the sense that they give it all up, but they give up 1% or 2%, right? Some volatile days like these two to the downside that stick, especially if they can come back into this gap area on the DAX. That would put pressure on our market. So that's kind of a wild card that's out there. Not in that, Europe is going to tank, but that Europe certainly could get a 2-3% pullback. And I'm sure it probably will come off of some news, kind of fear-driven news if it does. And that would pull our markets back as well. So that's kind of another wild card that's out there. But I suspect tomorrow we're going to try to push higher. And then we'll see more data on those sectors, which will give us a better idea
of if we're really going to stay up there or not. And I don't know if we will. As a matter of fact, I'm not sure that we will. I kind of suspect pressure's building still to get to the downside. That's it for tonight. Thanks for joining me. Have a great one. I'll see you next time. Good night.